Okay, so we've got this a big stack of information here.
Yeah.
All about annuities,
Mm-hmm.
specifically
Yeah, this one's about the
the American Equity Guarantee Shield.
Guarantee Shield.
Fixed annuity, right.
Right.
And it's being pitched as a way to maximize retirement income.
Mm-hmm.
I mean, that really what it does? I don't know. I guess that's what we're here to figure out.
Yeah, exactly.
So I guess maybe we should start by, like, I don't know, explaining to people what an annuity is.
Sure, yeah.
You know, what are annuities? Like, how do they work? Why would somebody want one?
Okay, so annuities, they can be a little bit of a confusing topic, but at their core, they're actually fairly straightforward.
Okay.
They're basically a contract with an insurance company.
Mm-hmm.
You give them a sum of money, either all at once or in payments over time.
Okay.
And in return, they promise to pay you back a stream of income,
Okay.
either immediately or at some point in the future.
Got it. Got it.
So this can be really appealing for people who are looking for that guaranteed income in retirement.
Yeah, I see. I see. Okay, so then, we keep hearing this phrase, guaranteed lifetime income.
Right.
I mean, what does that actually mean? And how does this particular annuity, this Guarantee Shield, how does it guarantee that?
Right. So that's a really important feature of annuities, especially the Guarantee Shield.
Okay.
So with the Guarantee Shield, what happens is you lock in a guaranteed interest rate for a set period of time, either 3 or 5 years, and your money grows tax-deferred at that rate,
Okay.
no matter what the stock market's doing.
Got it. Got it.
So when you're ready to start taking that income, the annuity can be structured to pay you for the rest of your life, no matter how long you live.
So it's like a safety net to make sure that you don't outlive your savings.
Exactly. It eliminates that fear of running out of money in retirement.
Okay, that makes sense. So let's see. Another thing they talk a lot about is this idea of tax-deferred growth.
Yeah.
What is that? Is that a big deal? Who does that really benefit?
Right. Tax-deferred growth, it might sound kind of complicated, but it's actually pretty simple. It basically means that you don't have to pay taxes on the interest your money is earning until you actually withdraw it.
Okay.
So this allows your money to grow much faster compared to an investment where you're paying taxes on the interest every year.
So I'm guessing that that's especially helpful for people who are maybe in a higher tax bracket, right?
Absolutely. Those in a higher tax bracket benefit the most because they're essentially deferring those taxes to a time when they might be in a lower tax bracket.
Got it. So, okay, we've got principal protection and we've got guaranteed interest rates.
Mm-hmm.
It sounds almost too good to be true.
Right.
I mean, what's the catch? There's got to be a catch.
Well, there's always trade-offs, right?
Yeah.
So with annuities, the main trade-off is flexibility.
Yep.
Annuities aren't as liquid as, say, a savings account. You're committing your money for a certain period,
Mm-hmm.
and there can be penalties if you need to withdraw it early.
Yeah, I see.
Of course, this particular annuity, the Guarantee Shield, it does offer a 10% penalty-free withdrawal after the first year. Right.
So that does provide some flexibility for unexpected expenses.
Okay, that's helpful. So wouldn't missing out on potential market gains be a drawback for some people?
Yeah, that's a great point.
Especially people who are, maybe more comfortable with risk.
Absolutely. That's something to definitely consider.
Yeah.
While this annuity protects you from market downturns, you also might not see those big gains if the market really takes off.
Yeah, that makes sense.
So it really comes down to your risk tolerance.
Right.
This annuity is ideal for somebody who prioritizes stability and predictability over those potentially higher but riskier returns you might get from the stock market.
So it's kind of like choosing between a really dependable car and a flashy sports car, right?
Exact.
Both are going to get you where you need to go, but the experience is going to be pretty different.
That's a great way to put it.
Okay, so we've got two options, right? We've got the Guarantee Shield 3
Mm-hmm.
and the Guarantee Shield 5.
Right.
What's the difference? Why would someone choose one over the other? So the numbers, the 3 and the 5, those simply represent the length of time that guaranteed interest rate is locked in for.
Okay.
The 3-year option offers a shorter commitment,
Right.
which could allow you to potentially take advantage of higher rates down the line.
Okay.
While the 5-year option provides more predictability over a longer period.
Yeah.
So which one makes more sense for you really depends on, again, your risk tolerance, how comfortable you are with things changing,
Right.
and of course, your overall financial plan.
Makes sense. Makes
Yeah.
sense. Okay, now this thing called a market value adjustment, or MVA,
Yeah.
the material mentions that it applies if you need to withdraw all of your money before the guarantee period ends.
Right.
Can you explain what that is?
Sure. So the MVA, it's basically a mechanism that ensures fairness for both you and the insurance company if interest rates fluctuate significantly.
Okay.
Let's say interest rates have risen sharply since you purchased the annuity.
Hmm.
The MVA might slightly reduce your surrender value to account for those higher rates.
Got it.
On the other hand, if rates have dropped, the MVA could actually increase your surrender value.
Okay.
It's basically there to keep things balanced and protect everybody involved.
So it's kind of a balancing act.
Yeah, exactly.
Okay, so that 10% penalty-free withdrawal after the first year, that sounds really handy.
Mm-hmm.
Are there any downsides or any catches to be aware of?
Well, it's important to remember that if you take a withdrawal before age 59 and a half, you might get hit with a 10% tax penalty from the IRS,
Okay.
in addition to your regular income taxes.
Right, right.
And also, taking withdrawals too often will reduce the overall value of the annuity and could potentially impact your future guaranteed income stream.
Yeah, so it's there if you need it,
Yeah,
but it's not something that you should plan on using for everyday expenses.
exactly. It's more of a safety valve for emergencies.
Got it. Okay.
Yeah.
So what about these qualifying nursing care and terminal illness benefits?
Right.
How do those work?
So these are additional benefits that provide access to your money if you need it for qualifying nursing care or if you receive a terminal illness diagnosis.
Okay.
They allow you to withdraw up to 100% of your contract value without those standard surrender charges.
Okay.
So basically, it ensures that you have access to your money when you need it the most without any penalties.
Okay. That's
Yeah.
good to know. So then we've got the death benefit.
Mm-hmm.
It seems pretty straightforward. Like if you pass away before you start taking income from the annuity,
Right.
the full value of the contract goes to your beneficiaries.
That's correct. There are no surrender charges or any complications.
Uh-huh.
It's a really valuable feature for estate planning because it ensures that your loved ones receive the full benefit of your investment.
That peace of mind is really important.
Yeah, definitely.
Okay, so at the end of that initial guarantee period, you have several options, right? You
Yeah.
can renew, withdraw, annuitize, or surrender.
Right.
What are the things that somebody should be thinking about when they're making that decision?
So that's where things can get a bit more complex.
Okay.
The optimal choice really depends on your individual circumstances and your goals at that time.
Right, right.
You need to think about your income needs, your health, your tax situation, and your overall financial plan.
Okay.
It's often a good idea to consult with a financial advisor at that point.
Yeah, that makes sense.
They can help you weigh the pros and cons of each option
Right.
and help you make the best decision for your specific situation.
So it seems like this annuity, it's got some really appealing features,
Yeah.
especially for people who want that guaranteed income and protection from market volatility.
Mm-hmm.
But it's not, a simple one-size-fits-all solution.
Exactly. You really need to do your homework.
Yeah.
Understand your own retirement goals and your risk tolerance.
Right.
And if an annuity seems like it might be a good fit,
Yeah.
talk to a qualified financial advisor. They can really help you determine if this particular annuity, or any annuity for that matter, is right for you.
So there you have it. That's our deep dive into the American Equity GuaranteeShield Fixed Annuity.
Right.
Hopefully you have a better understanding of how it works and some things to think about.
Yeah.
But, even with all these guarantees, are there other ways to create a secure retirement income that maybe offer more flexibility?
That's a great question.
That's something to explore, maybe with a financial advisor.
Yeah, absolutely.
All right, thanks for joining us.
Thank you.